Hi everyone, welcome back to Berich Podcast. This is a Q&A session. Thanks to all the people who are posting questions related to the investment and share market. We are answering as many questions as possible. Those who posted the questions in the comments and the questions are not being answered, keep waiting and it will be answered in the upcoming videos. As of today, the first question is, please talk about reserves and surplus, how it works and how will it affect the share price?
Okay. Reserves and surplus in the easiest way would be when you were small, right? Your mother used to make for festival.
Okay.
She'll make, let's say, some laddus. She'll say this is for the festival. Then after she makes, you'll be waiting to have a little bit, some samples. So she'll take some aside and say this is for the festival, and this what is left you can enjoy. You and your brothers can have. That what she keeps aside, no, that is the reserves. What she says you can enjoy is surplus. In the simplest form. That's what it is. So a company makes profit. It says I need to pay so many liabilities. I need to do new machinery, new build. So they take that and keep it as reserves.
Okay.
For future. Now the shareholders are like, what about us, Baba? He says, don't worry. I kept reserves. Now when the rest is there, no, that is surplus that we can enjoy. Okay. You can take dividend. You do what you want to do.
The simplest explanation.
Yeah, that's all.
Okay.
Understood?
Yeah.
Please
explain about QIP.
What is QIP?
Qualified Institutional Placement. I checked for the definition. It said that it's primarily happening in South Asia and particularly India, where company issues convertible debentures and they can be converted to equity shares and it can be given to a qualified institutional persons.
I'll tell you very simply. Okay. Don't get confused. I'm a company. I need lots of money. Instead of going through the hassle of making shares and then going to the public and doing follow on IPO or this, that, struggling with all that, I know Arun is loaded. He's a good guy.
Okay.
He wants to buy some of my company. I go to him. I dump shares on him. He gives me the money. Saves me the whole effort. So he's a qualified institution.
Okay.
And I'm placing shares with him. He's buying the shares from me. So LIC can do that. HDFC can do that. Some high net worth individuals can do that. Some FIS can do that. Where they take like a block deal. They swallow. It's a quick way to raise money for the company. Shortest way, fastest way for the company instead of going through all the other hassles and the paperwork which they require.
They'll be having the share and will they become the board of directors on something?
That is all depends on negotiation stuff and the amount, the shares they're buying, what the requirements are. You can definitely negotiate. At the end of the day, it's between the company and whoever is buying the share.
Okay.
You can negotiate that, yes. But no company would like to let you sit on their board because once you enter the board, you are part of the decision making.
Yeah.
Even voting rights, that's why they carefully hold it to make sure they don't lose control of the company. Okay. So I doubt any company would like you, such someone come and sit on their board unless there's a specific reason. And even if he's allowed to sit on the board, he'll be stripped of any powers or anything. He'll be like someone who gets to watch all the fun.
Okay.
It's like watching a live action movie where you are getting to sit next to the director and you should not talk. You can sit there and watch the movie being taken and enjoy. Sit with your popcorn.
That's your power.
Yes, that's the amount of power they give. So that is what we call QIP in the simplest term. Of course, you can look at it. The reason why I don't want to dive into it too much is it is something you or me or most of our viewers, we will not be invited to participate in it. And both of them in terms of what it does to share price. If a company creates a lot of surplus more than reserves, that means it will be paying dividends more. Of course, it reflects in the share price. Share price will be reflecting that. If you're wondering why is the PE so high, you can dive down and see in the reserves and surplus, the company is generating the kind of dividends it's paying. Maybe that is the reason for the share price to be so weighted. Same thing in QP. QP, you should be careful because if you own the shares of the company and the company is doing this, you should understand who this guy is they're selling it to, why are they doing it, what are the funds going to be used for, what is really happening, you should see. Because in India, a lot of family-run businesses and a lot of these family-run businesses are family friends. And you know how family friends, the relationships are. We have done many videos about you, me, bye-bye. So you shouldn't become bye-bye to the investor. So keep that in mind as you invest and tread these waters carefully. It is nice to see that our viewers are taking this kind of interest and asking these kind of questions. They're all relevant. Shouldn't be afraid to ask these kind of questions. They're all very much relevant.
So in the definition, it is given that debentures are converted to equity shares. So what is debentures?
You tell me what is the debenture. It is all related to money, man. Debenture is you lend money to the company, right? Then it gives you the option of instead of paying you back, on a specific date, they'll convert it to
shares. Okay.
It's nothing more complicated. I can give fancy names, right? I can give nice names to all these things, but essence is company needs money. So you lend them the money,
Okay.
right? Then they say it's convertible, non-convertible. Convertible means it can be converted to shares. Non-convertible means they'll return the fulus back to you.
Okay.
But usually in QIP, it will be converted to equity shares. What you're taking is equity shares. It's a very quick way of raising money for the company. An effortless way, especially if they have someone they know and they trust. It's easy for them to raise cash.
Yeah. So as we are talking about debentures, one of viewer in MoneyPechu asked, please explain about Manappuram NCD.
NCD is non-convertible.
Yeah.
It's a loan to the company, right? The company wants loan. You're lending it money. It pays an interest for you. That means it'll either be a monthly interest, depending on the type of terms, and quarterly or annually at a certain rate, it'll pay you. End of the term of the debenture, when it closes, end of the period, you get your cash back.
Okay.
So it's non-convertible. It will not be converted to equity shares.
Okay.
If it is a convertible, you can take the option of saying instead of returning me cash, you give me equity.
Okay.
And it will be set at a specific price, which usually be attractive. So it will be a discounted price.
Okay.
Type of bond. And usually they can be valued from 1 lakh to 10 lakhs, depending on how they structure it. Basically, dividing whatever money they want to borrow into pieces and then trying to sell it to the market.
Does it have particular number of shares? Like in IPO, it will be multiples of 1,000?
No, the company gets to decide. Usually it starts from 1 lakh, 5 lakh, 10 lakh.
Okay.
So it can be any multiples of those. And each one, depending, can be convertible, non-convertible. Some will have monthly interest. They'll give a mixed basket of it. So making sure they can get maximum coverage of the money they need. Okay.
So I hope that it was an interesting session and you had some learning about non-convertible debentures and reserves and surplus which the company have. So if you have any queries regarding the investment, please post it in the comments. We'll answer them in the upcoming videos. So if you found this video informative and interesting, please like and share it with your friends and subscribe to this channel for more videos. See you in the next episode.
Thank you.